Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab chat? Thank you, Seabass. Thanks, Alan. Okay, well, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. Please note that I am now quoting the September, that's the ESU contract, and also the NQU if we go there. So we have rolled over, and the roll will continue this week as the volume moves from the expiring June contract over to September. So all levels have been adjusted to reflect the September contract. Also, please note that the U.S. markets are closed on Wednesday regarding the Juneteenth federal holiday. So grab a pen and a piece of paper. We're going to go over a couple of things. If you guys remember on Friday, we were long with a long bias. The market went down Friday morning, brought in shorts. Our bias was long. It was a mean reversion day. I have posted that, and it is going to be available to everyone to review. It is Fridays, and I believe it says something like trading business or video game. And this stream is about the business of trading, not a video game, not an action event. It's business. If you're interested in the business of trading, you might be at the right place. So let's go take a look. So Friday, by the way, the point I wanted to make is we had, and this is in the June contract, I believe the target was something like 38 or 36, which I suggest everybody write down. Now, I cannot predict anything. Nobody can. But the market has certain behaviors, and this is what auction is based on. And they ended up at the end of the session, the very end of the session, we tagged that target. Now, why do these things happen? It's because of how the market tends to work. And of course, past performance is never indicative of future results. But if you can learn what market mechanics are, if you can learn how to get potentially at times in alignment with the market and wait for what's called structured or vetted trades. Structured is what we do in the Trader Lab. I share 60 PDFs of structured trades that you can download, reverse engineer. Plus, there's a library of webinars on the process you're going to see unfold, as well as a community of like-minded traders that have come together to leverage their collective experience. And all this is available to all of you at no cost. And as long as it's available at no cost, I suggest you consider visiting the Trader Lab. So let's take care of business. Grab a pen and paper. We're going to take a couple of notes. We're going to talk about today and the trades for today. And you'll see how this might work. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is based on structured trades that are available to everyone to download in the Bookmap Discord Trader Lab chat and all the webinars and the community, all at no cost. The other thing about this stream is that I always start at the beginning of the day. I lay out what the anticipation is. Now, anticipation is almost like a Heinz ketchup commercial. You kind of have to wait for it to come out of the bottle, and we never know exactly what will come out of the bottle and when. I hope you like the analogy. So let's go take a look what's going on here. Grab your pen and paper, and it's really important. We do not live completely in a vacuum when we trade. We have to take into consideration what's called context. And context is really very difficult for us because it's multiple time frame. And I think of the term fractal because the clock really doesn't regulate how the market works, other than like the open and the close, things of this nature. But other than that, it kind of goes on it based on participant behavior. So let's talk about, before you think about trading today, you've got to think about Friday. What happened Friday? Friday, the market went down in the morning. I think it one ticked Thursday's low, did not get to the ETH low. Now I'm referencing June because I wasn't looking at September, and I'm now looking at the September contract, just so you know. And then the possibility after the reversal was to come across the range, squeeze out the shorts. This is all Friday, and go for the 36 or 38 target, which was a naked volume point of control. A point of control being a previous retail price. Think of this like shopping. The other way to think about this is like Russian dolls. And a Russian doll, and that to me is just a way to think of time frames or fractals. Higher time frame, big Russian doll. As you go down in fractal or time frame, the Russian dolls get smaller, but they're inside of each other. And essentially, we trade rotations that rotate on top of themselves inside of higher time frames as we expand the time. So it's sort of a compression in a micro time frame up into a higher time frame. So based on Friday, what did we do? We only one ticked Thursday's low a day. Well, that's interesting. Now, we had a news event on Friday that also disrupted the market, got shorts in, and that's what led to the let's just say the potential to cross that range and then squeeze them, which is what we did. So now we come into today. First of all, we look at the ETH. What happened in the ETH? So let's take a look. The ETH low is here. Friday's retail price is here. This is like the fairest price from Friday. And this is, remember, a shopping experience. What is the auction? We have to get back to the fundamental of what this thing is all about. What are we doing here? Why does the market do what it does? How do you make sense of that? Well, if you've been following the stream, you know for me it's not indicator based. I don't use any indicators. I use participant behavior. And it's not about whether or if there's a right or a wrong. There's no right or wrong in trading. However, many of us are looking to an indicator to define the context, where in fact, the context is what defines the indicator. So what do you want to be doing? Following, or do you want to be as close to real time as you can be with an understanding of how the market works? Many retail traders come into this business, and unfortunately, I think this is a huge detriment to their potential to succeed, is thinking that you plug and play. This is like, plug a few indicators, get a few time frames, let's put some more indicators on, create more certainty, and off we go. And I'm going to suggest, at least from my experience, not so much. But if it works for you, come to Trader. Even if it doesn't work for you, come to Trader Lab. Bring your experience. We all have the same or similar or even divergent experiences, but there's a lot to learn from each other. This is the nexus, if you will, of the Trader Lab, leveraging our collective experience. We've all done what you've done, or derivatives of it. The question becomes, are we going to keep doing something if it doesn't work? The problem, and I'm going to move right on, is that we get rewarded with random outcomes. When gamblers come to the casino, they win, so they think, even though the house has the edge, and over time, the house extracts the dollars from the gamblers. Gamblers win. So we can either be the house and only play games that have a structured process. They don't vary with a statistical edge and accept a random outcome like the casinos do. Or we can sit with the gamblers, and we're still going to walk out with cash. But over time, we don't have the edge. If anything, over time, and it might not be us, it probably would be the other guy, right? The gamblers lose. So something to think about. So let's talk again about this. Highest price, this is the auction, retail price from Friday. This is like your shopping experience, the auction. This is retail. If the store that was selling S&Ps on Friday, where most of the volume took place, sells out, and you like the price over here, I don't know about you, but if they were selling S&Ps down here, I probably want to buy them if I could get them, because now the price is higher. So if the price is higher, I can come back and check, is this price really too low? And I don't know that. It's part of the joy. If it is too low, it sets up a potential long to come back over the opening swing, and which will be right here, and then go to targets. Let me show you the targets. Overnight mid, settlement. And there's statistics for this. Microcomposite volume point of control, 5,500. This is a higher time frame version of that naked volume point of control I just showed you below. It's all fractal. ETH high. And then we have stop sitting over Thursday's high. And somebody in Trader Lab, it's covered up right now. Give me the number for that so I can let everybody know. Thursday's high in ESU. And then we should be good to go. And then we have our all-time high, which is somewhere up here. Good, I didn't put it in. Shows you I'm slipping in the terms. 55.1950, I think it is. Is that the all-time high? 50 in I think. Trader Lab. I just want to get these in here. $19.50. Okay, thank you. And what about Thursday's high? I think we took it out already, but that's important. Because these are targeting 1075. Great, thank you. So I want you to see what this process is about. This is the business of trading. And again, part of being in the trading business is accepting randomness. Okay, so now we're going to look. Now, there are two trades that's set up, actually. One trade, actually, but a couple possibilities, and I'm going to explain them to you. If you watched Friday's webinar, you saw that I had a long bias. Now, it doesn't end, but I was short in the morning, right? Why would I get short in the morning? Well, first of all, I no idea, but I had a long bias. So the market got to the long targets. But what was the early behavior? Selling. The selling actually helps my long, because now I'm going to have buy stops above the highs. So I want to get long. So here's my choices. I'm giving you detail here because I want you to know a way. And again, it's not a right or a wrong. It's a way to think. So this is my potential target. It has about a 70% probability of getting hit. This has a high probability also, but this is more important to me. And it doesn't have to do anything. What else do I see? Let's see why. Resting liquidity in the order book, right here. That means the buyers, and we don't know, of course, part of the thrill is, are these guys real or is it, Fantasy Island? So that's part of the liquidity conundrum. But it's not the same as algorithmic behavior, which is flashing and flipping and flopping, or HFTs. It is resting. And typically, or often, I got to use the word often because I don't know what's typical in trading. This resting liquidity or iceberg limit orders. So anyway, we don't know. But anyway, so now going back to the other aspect of this. This red line, which we will come to, these are selling iceberg orders that are sitting in the book. Okay, now the market is just opening right here. It hasn't even gotten there. I know with Bookmap, because I can see all of this, and this is the whole point of having an order flow tool, I know there's sellers sitting up here. So how does that impact me? Let's think about it. It says to me, potentially, I'm going to have a short, and I don't know, because we all know, or some of whoever has a high tier order flow tool knows there's sellers here, and we can see them. Do I want to buy here to go into these sellers and hope that there's enough buy power to absorb the sellers? Or what will happen if I go up and these sellers absorb the buyers, and then the buyers go, I've had enough of that, and then we rotate down and take the early buyers out? This is and this is right now at the RTH Open. By the way, if you have questions, post them in YouTube or the Bookmap Discord, Trader Lab chat, which of course is available to everyone if you're visiting in YouTube at no charge. A great community, serious community, no romper room. There's a lot of entertainment out on the internet and a lot of opportunities to subscribe to streams and chat rooms. That's all wonderful. And you should always avail yourself of education. But then again, you might want to avail yourself of something that doesn't cost you anything at this time. I'm not a vendor. This is not one of those trade calling rooms. If you're interested in learning to stand on your own feet and what the business of trading is, then you are invited. Serious. No nonsense. So, overnight volume point of control. High probability. What is this? Retail in the ETH. Remember, I haven't even showed you the first trade yet. Retail from Friday. Let's follow now. So, two possibilities. Of course, there's always many possibilities. If I see a short, and this is what this is going to be right here, and I'll narrate it for you. I have choices. I can take a short, and if I choose, going for this, or I can read the short, not take it, and use the short to get long towards with the alignment up. That's my plan. Not saying it's a good one. I'm just saying it's mine. And whatever happened, happened. So here's the first shorts. Now, they're not shorts for me. What are they? Well, choices. Get short, up to you, or don't get short. This is like a trade management process. In other words, I see a short and I want to get long. I guess I don't get long here, right? What do I know? This is retail in the ETH. What do I do here? I get some buyers. This is the ETH resistance. I got an iceberg sitting here, remember? And I got a little liquidity algo behavior here, not a big deal. I break low. This is a variable high volume node. It's the RTH Open. And what I do, and I always tell Trader Lab participants to manage their FOMO, obviously. And what is this? This is not a trade anybody should take unless they are a profitable, seasoned trader. This right here is the opening swing high. There. What happens at the opening swing, you ask? It gets taken out unless we have trendy jump out the window Acapulco cliff dive behavior. With my target below, I'm not enthusiastic. I suspect when I get a down leg, I'm going to trap these sellers, and then the squeeze is going to become the fuel, just like Friday. Similar. So let's watch. So, too high, I see my seller. VPOC migration. I'm not paying that. Now, this is in developing time frame, so let's watch. This drops down, suggesting lower. Now, I always talk about Jekyll and Hyde. You know Jekyll and Hyde. Jekyll's the intentional, intelligent, analytical doctor. Brilliant, right? And then there's Hyde, who's the lunatic. The other side of the personality. Unbridled emotion. Uncontrollable. Rage. Well, Hyde is, we have two things operating in our mind at all times. We have Jekyll and Hyde. And Hyde is emotionally triggered. So Hyde experiences things like, oh, I should have taken the short, or I'm going to get stopped out. I'm not taking whatever it is that you're supposed to do. Or, this looks crummy. I'm going to move my stop to break even. Or, gee, I got stopped on the last trade. I'm not going to take the next one. That's hide. Casinos do not work with hide. They understand the only way they extract the edge from the gamblers is to deal the next hand. If casinos ran their business like we do, they go out of business like we do, because we don't understand that this is a gaming business, not a right or wrong business, and not a hide-driven lunatic business. It is just business. And if you want to be in the trading business, then you got to start acting like a trader and not hide. That's not to be insensitive to the challenge. It's to help you understand what you have to deal with. And the way you deal with it is with a business plan and structured, vetted trades. And we all take stops, so get over it, because casinos also pay the gamblers. So you got to get over it. Write that down. Stops are not an approval rating for you. It is a account protection process that is here to protect you in your account so you can take the next trade. Now, so this is a short. Let me show you. That's not. I can't take it because the best I have is to here and to here. So by the time I can get short, which might be here or here, where's my range? How do I get risk neutral? So this doesn't fit. So I say, I see the short. Okay, I got a short. Hide's going, you should have taken that, right? But what is my trade plan, which was done outside of trading hours, not emotionally attached? My trading plan says not enough range. Because if I get short here, and I won't sell this, I'll probably get short in here. Stop is over here. So here's my risk. Okay, look at my risk, or to here, or to here. But this is my entry to my stop, and I'm going best case probably is this. Okay? I cannot take this trade. Risk, reward. Why would I do that? And if you did, trade plan and what qualifies a trade. Now, right here, I'm looking at this, and I see a trigger. I see seller here, and I don't know, what do I have here? I got nothing. I'm floating in space. But this, to me, when I see this, my brain, and this is a trade for me, and I'll explain it to you. So the short, not qualified, but I see the short, stand aside. Here's micro high volume structure. Now I'm going into fractal. Break low, break high. I got long. Stop is under here. Now my job is to come across. This was the last location. Let me make sure right here. That was too high, opening swing. So I scale ahead of the opening swing, and here's why. In case we break the high, take the stops, which is right there, and these guys, these selling icebergs are here. I'm hoping you see how you put pieces together. And if I exhaust and the selling icebergs, which are going off right there, you can see them. They're sitting in the book now, and there's more sitting here. Create mean reversion and come back here. And then what I'm looking for is for it to either hold here, variable high volume node, or to hold here and continue up to my target. So let's watch. This is a trade I took. So I'm thinking, yeah, looking good, Lewis. Variable high volume node. Watch. This was too high. Shopping. If this is too low and that is too low, then the potential is to pull back here. Liquidity comes in the book. This is support. There's the liquidity. VPOC migration. Too low. Watch. This is process, guys, and anybody can learn this. Now, the outcome is random. I mean, you don't expect to just have a printing press in the basement, do you? An ATM, which I think is the fantasy of most traders. So what do I know? Support, right here. So right here, this was the last area that was too low. So we came out here, This is the retail price. I cross above it. Here's my possibilities. I pull back here and there and go higher. Have to clear this micro high volume structure. VPOC migration. Looking good, Lewis. Break below it. Too high. Where's the last locations? Here and here. This is kind of the last spot. So either it's going to be good from here or hasta la vista, baby. Watch. We come back up here. I'm thinking, looking good, Lewis. Right here, this is support. This is resistance. I held this. I'm going, yeah, all right. I'm clearing this. We're going now, Lewis. Come on. Watch. Icebergs. I'm going into these icebergs, and I'm disturbed. But that's hide. What do I know? Nothing. What happens here? Support, right? VWAP. So we have, let's look at the process. Too high, down below, too low, long. Take out the openings. Make sure I got the right. Yeah, opening swing high, scale, hold. This, watch the yellow brick road. Too low, liquidity alignment, push off, looking for continuation. This shifts up, looking for continuation. Not so much. Come back here, support, potential long in Trader Lab, or not. But this is, what's resistance? Here, scale if you added, or nothing, or you took a long. All of this is part of Trader Lab structured trading. Here, looking good, Lewis. What do? Break under. Not so good. Where do we pull back? This is support. Mid VWAP. All right. Not so bad. Break above. We got it now. Break below. Trouble in River City. Support. Out. This is like a pie in the face. This is the first trade. So that's the first long. The short was a positioning structure, which was not a short. It was to get long. This down here, and this is what's interesting about this, in my mind, was a test of this. That, and the market doesn't have to, doesn't have to do any of this. Before I move on and show you the next long, is everybody tracking, and do you have any questions? Do I get long on the retest 54.92? Let me see. I'm getting a question here. Do I get long on the test of the micro high volume 54.92 at 833? Are we talking this? Are you asking about this? In other words, waiting for the break to test here? Is that what you're asking me? JT? No? There wasn't a retest? No? 54.92? Oh, this? No. You can. I mean, I don't, because this is what I was leaning on for the long, and it doesn't have to get there, because I interpret that like, well, maybe it's too low. Maybe this is it, because where's my sellers down here? Now, I would like to see something else, but it's not for me, because what I'm thinking here is, if I come outside somewhere, and this is part of the joy, it is mean reversion, which is coming back here. So I need to be trying to get long. It's better from out here. I got more range, but I'm bullish. I only want longs today. I don't take any shorts so far. So anyway, if you were waiting for it, then that's okay. Then you don't have a trigger here. I mean, all of this for me is telling me long. This here, long, right there. Break here. Once you come under here, it's coming here. Maybe. I always going to say maybe, because I want to reinforce the concept in everybody's mind that it's random. Write that down, by the way, everybody. Randomness. Casinos, our business model. And by the way, Friday's webinar, I decided to share that with the public and not keep it exclusive to Trader Lab participants because it was a difficult day, but a profitable day. So isn't that interesting? Difficult day, profitable day. How do you put those together? You need to understand how the business works, how the market works. And still, you may not have a good day. It doesn't have anything to do with it. But it has to do with understanding this business. This is the same thing. This business, this is how the market works. We need, and I don't use indicators. I make a point of that because I know it's almost like feeling naked if you don't have an indicator. And that's almost like somebody telling you what to do, not you being able to interpret what's going on. So I'm not a fan of indicators for developing traders. Here's the other part of that. If you understand what's going on here, and I'm saying the collective you, then you could maybe deploy an indicator that supports you with this context, which is outside in, outside in, out. So this here is the in. If this is too low, then we test here. That's what this is. Oh, it's on sale. Yeah, but this is too high. So you can anticipate this. Now, if the market, since we're thinking longs, we could just come through here and keep going. That's what you don't know. So write that down. Clueless, random, and that's the way it is. So right here, looking great, getting the champagne out, thinking about the pint of ice cream for dinner to reward myself for doing my thing, and I get taken out. So if I get taken out of the trade, I still made something on it. But then my brain goes into what's going on. Well, I know what's going on. I got this still sitting here, and I have this here has a 70% probability, past performance not indicative of future results. Now, let's look. Let's look. What do we get? Resting liquidity. In the book, resting is meaningful. This is algorithmic and nonsense. Well, up to you. That's my opinion of it. Doesn't mean anything. Let me just look a little further here. What is this? Nothing. Okay. So this is my target for looking for a long. This, since RTH opening before, was resting. It's a target. Now, and remember, the thing with the market is it doesn't have to do anything. Here's what I see. Now I'm going to come back to Bookmap. It's zero in. Let's look. By the way, this is the NQ. All I'm doing, the NQ I have on here because when I see behavior here, you'll notice they correlate. That's why it's called correlation. But I don't want another chart open. I don't want to get distracted. I want to concentrate right here. So with Bookmap, I can have others, and you can have whatever you want on here. As long as it's somewhere else that's open, you can just select it and have different correlations for different market. If you're watching bonds or the dollar or something, you could have all of this on here if it's material to you. It's not, the only thing material to me is the NQ. And I don't trade off of what the NQ is doing. I trade off of what's happening right here because this is the market I'm trading. I don't use the VIX. I don't use any of this other stuff. And I've done it all before. So I don't do it because it creates conflict, ambiguity, and thrashing. And more in trading, for me at least, is less. Because when you have conflict, you get paralyzed. And a lot of us load things on to think we can create certainty and avoid losses. That is a psychological need. It has nothing to do with the business of gaming. And the casinos don't change their game. They just stick to basics, minimized the inputs so they can play blackjack exactly the same way. So I come into the liquidity. This is the absorption detector. Now, if I didn't have the absorption detector, I would surmise it's being absorbed, but I know it's being absorbed. And I have 76 sell stops coming out, and they sweep the book. And I have iceberg. So icebergs are on the other side of this and absorption. Passive side is absorbing. So you have sell delta and buyer absorption and location. And so right here, and I have this jump in the book. This is the kick in the pants. I think maybe I should trademark that, the kick in the pants move, because absorption. And now if these buyers, these icebergs who absorb the sellers want the market to go up, they now can come back in here and it skews the book. This is how order flow can help you. So I get long. Where's the stops? Mid, VWAP. Variable high volume node is resistance. So here. So notice where we go. Look at the behavior. Variable high volume node. This is my resistance. Now I'm bullish, so I'm okay with this. Watch. Watch where we come. Now my stop is under here. This is, let me show you the fractal and the long entry. Two ways to do this. And by the way, give a thumb up in YouTube, and if you have questions, please post them. I'll come up for air. I just want to show you this trade. Here's this chop, chop, chop. Let me show you. Now remember, I always talk about Russian dolls or fractals. This is a fractal. What this is a little chop, chop. And a little chop, chop is an auction. This down here is also part of a chop, chop. Higher time frame. It's the entire day from Friday. The whole enchilada. This was the highest volume. Retail, if it's too low, we're going to leave it. In here is a chop chop, but it's a fractal, it's microstructure. There's the high volume. In this, it's right in here. I have absorption, I have sellers here, I have seller here. Absorption. When I break high, these sellers are, as we say, under the bus or trapped. So they're stuck. So all the other sellers in this leg are now potentially fuel for the counter rotation. I come back up. This is the last place it was too low. When you break below it, in fact, let me show you something else in microstructure. This was our support, remember? Break low. Where do we pull back? Here. Too high. Resistance. What's too low? Support. 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 Come down. So now I'm showing you the micro. Let me show you this. So this is our little micro auction. I'm going to open it up, and I hope you get something out of this. Watch. This is Trader Lab. It's process. Now, I want you to just get some ideas, and this is why I do this stream for you guys, to give you something to think about. Whoop. So this is, when you see this, this is where the volume is, right there, right, roughly 90. And that's where the high volume is in this little structure. And we had the absorption. So you can see this is where the volume was going off. We break high. This is now a trigger. You have choices. You can try to buy it against here on a pullback here, or you're just going to jump into the thing and put your stop under here. Up to you. Now let's watch. There's the high volume. Watch. Location, location, another, you see the move up. Where do we pull back? So high volume is here, micro. What's this? Chop, 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 chop. Look over here, high volume, HVN. Let's look at the next fractal up. I normally don't get into this, but I figure you might like it. Fractal, fractal, see? So as long as you're above this, and actually above this, because when I started out, I got long in here. I don't wait sometimes. That's hide. What can I tell you? But I don't need. I can read it. So I just activate. So I get long like in here. And my stop is under here. It's not here because they could come right down like this and pick it. I call it a stop pick. And if you're micromanaging, you could get taken out and it's still a good trade. So I'm under this. Hope that makes sense. We come down, we check this. Now let me explain the bubble. Trapped seller. What's this? Seller. He gets trapped. So you got trap seller, trap seller. They're absorbed. This is all bullish behavior. What do you get here? Sellers. No bueno. Trapped. Before I go further, questions? Are you getting something out of this? I'm coming up for oxygen. And believe me, I need some oxygen. And thanks for your patience. How we doing, guys? Please give a thumb up in YouTube if you have questions. Also in the Bookmap Discord Trader Lab community. Remember, I've made Friday stream public. It's I think it's a pretty good one because it wasn't, it was a tough day. And you guys don't want to see walk in the park. You need to see every day in the market because every day is unique and presents its own challenges. The idea of having a structured, vetted trade plan using a high-tier tool like Bookmap to see inside, the minutia is what we do in the Trader Lab. We also want to understand how this business works. It's gaming. So we could take this fantasy away of knowing what's going to happen. All we can do in the game, like the casinos do, which is really a great model, business model that we can use. So you're not trying to invent something that's already been done, is gaming. So are there questions? I'm looking for a moment and then I will get back. Yeah, Martin, Bookmap, there is a trial version that you can take a look at. It is limited in its functionality, but I suggest you come to Trader Lab. There's no cost. You'll see a lot as far as how this is used. And there isn't one way. The thing about trading is there's not one way to do anything or an only way. I do it this way because this is, to me, the purest form of trading, because this is what it all evolves out of, which is the behavior of the participants trying to figure out what is this worth. And that's really what we're trying to align with. It's not my indicator. What's my indicator going to tell me? I don't know, because I can't use them anymore. And I use them on steroids. I built trading systems. Those who, I've been going on 45 years of doing this, both professionally and, of course, now as a day trader. I was never a day trader in the day because we didn't have it. Well, we did have some of it, but it wasn't what we do here. So anyway, long test. So stop must. If you're putting your stop here, to me, that's not good business. This is good business because this is in here to skew the book. Okay. Now, if they pull, then your breakfast is going to churn in your stomach. But all this is longs. And the Bookmap is helping me see the trapped sellers. That's the other piece. When you see selling delta, there's two things. Sell stops become market orders and sellers initiators. And it's a mix, so you don't know who's who. But you do know that the aggressors show up as delta, okay? Not the passive side. So when you have a seller and it doesn't go somewhere, that is telling you that there was passive, they were absorbed. And where's the passive? They're over here. The limit order book is passive. So the difference between an aggressor, which is a market order, they cross over, and a passive order, passives are limits. They're in no hurry. Oh, you don't get my price? I don't care. I'll catch you later. That's the difference. So we take note of the aggressors, much more relevant. Where's the aggression? The thing is, stops show up as aggressors, whereas they're really, not really aggressors. They're just running for the exit. So long. Now, what is our obstacles? What's this? So here, scale, see the behavior? Why does it stop there? because it is now too high. That's resistance. Long resistance. Now you have choices. Scale or stop stays here and your scale is here. Why? What is the context, guys? I know now I'm talking multiple time frames just to make you nutty. And I'm only in here for 10 minutes. What is this? Outside in. Outside in to here. Break below. Outside in to here. However, what do I need to do? If too low, coming back here. Long to there, or scale, subject to your plan. Long to there. I anticipate a bounce. Scale. Long here. Back to the high volume. Resistance, microstructure. Long to here, or here, or here. All this for scaling. It's called mean reversion, and you can break it down any way you want. Now, let's go back to our targeting. What are we looking for, Lewis? Settlement? 5505, microcomposite volume point of control. ETH high, Thursday's high, and then, what they call the Hail Mary pass, new all-time high. All this is laid out in the Trader Lab before the open. Does your trade plan know what you will do? Not what the market will do, but what you will do, why it might happen, and how you might get in alignment with it. And you will take stops, and the market could care less about my plan or your plan. But if you understand how the market works, you would be long. You would follow a plan, which you have structured and you have vetted. This is what the Bookmap Discord Trader Lab community is all about. And then you'd follow the yellow brick road. By the way, watch. I haven't seen any of this, so this will be interesting. This is too high. This is too low. Watch. This is support. This is resistance. Actually, it's support coming down. Get below it. This is support. Now let's watch. What is this? Isn't it the same as this to this? Isn't it the same as this? Isn't this break high right here a potential long also, if it's in your plan? Isn't the target of settlement a place you would scale? Isn't this a variable high volume node, which I'm going to label, right? You know how I do this. Follow the yellow brick road. Made it up. Wizard of Oz and variable high volume nodes. Mentally, I start thinking of things like this. I made this stuff up a long time ago, which doesn't mean anything. It's just I started observing behavior and I went, oh, that's interesting. Now, this is too low. This is my support. If I come through, I have the next one. That's all I know. This is a potential long or not. I'm showing you trades that you could take subject to you vetting them and having enough range in the Trader Lab. And why might I still get long? This 5505, what's this? A higher time frame version of that. Same thing. And what does this and this have in common with this yellow line? This is the same thing in a developing time frame, shorter time frame, or a fractal. So this moving around is the same as this, which is fixed, because this is just Friday. This is today's auction and the pricing. So it all fits together. So this is support. This is resistance. It is support. I take it out. I don't jump out the window, but the teeth do chatter. And then if I hold this, this is a potential long, and I'm going for this. Or it breaks high. Now this is support, and it doesn't pull back. This is microstructure. This is resistance. So this could be a long to there or to there because the trend is up. Scale needs to hold this. Stop can stay under here. And that's another Trader Lab trade. I'm showing you variables of it, variations, I should say, because you can do it any way you want. And there's more. You're saying, really? Yeah, there is. Let me show you this. At 9 a.m., my time, Central Time, we have something called the IB30. It is really about the first half hour high or low. So the first half hour high is here, right? So when whichever side we take out first, the probability is skewed to taking the first hour's high out, which is up here. So, and I'm only long, right? So I know if I take out this high after 9 a.m., which is here, then whenever the first hour's high, which is called the IB high, is set, I have a high probability of taking it out. What that does for me is says, not only did you get long at a good place, but now statistically, we have a good probability of taking this out, wherever it is. And that sets up this target, Thursday's high, because there's buy stops above it, and all-time high, not recommendations. This is how you put a plan together and how you do it. So this is a long, and because I've got the IB30, see how it works? I'm now thinking I'm going to take this out because wherever the first hour's high is at 9:30, which is there, which is the high that was created over in here, then I have a high probability of taking it out. So this is a super duper long back to take out this swing high. See it? This is Trader Lab traded. And again, who knows? Not me. Buy stops are above here and the ETH high. This is a high probability target also. Over 90% probability, past performance not indicative of future results. One or the other will get taken out. And in this context, the overnight high, just to throw something for you to think about, about a 50% probability. Now you're going, well, that's not so high. Yeah, but the IB high, got to find them, 69% probability. So I'm looking at that's the first hour high, which is, I think, down here. Lost it. Nope. Here. 69% probability. Why wouldn't I be going for this in an uptrend? What about the previous settlement from Friday? Let me find it for you just to give you something to think about. If I can find it. I got a lot of statistics. 72% probability. So, and past performance not indicative of future results. These are all available to you in the Trader Lab, as well as the Trader Lab community. And there's no cost. And I really have to reinforce to you guys, I cannot say how. Now, the Trader Lab has been doing this at no cost for several years. Like everything, nothing goes on forever. And I'm sure you've all subscribed to chat rooms and gurus. And, I don't know what your outcome has been. But I remember what I used to say when I would pay for education. A lot of it was, well, I'm sure I got something out of it. Well, for a lot of it, what I got out of it was stop doing that. Again, just me. So where are we trying to go? New all-time high, not a recommendation. Once you're in this trade, you're just hanging out. And that makes us current. Now let's watch this. VPOC migration. This is a structured add. I didn't even see this thing. This is a long, an add. Why? Because of this. What would you do here? You do nothing, of course, or you would add, your stop would go under here, you would be scaling ahead of this, and then you'd manage a runner. So that's the last trade right there, Trader Lab. So you'd be long. you'd, you know, be long, or if you took a short, maybe you got something out of it. But here's what I got to go back to the short. For me, it's not a qualified trade. Why? Range, context is up. What happened on Friday? You know what I mean? So all those pieces come in. What happened Friday? Reversal. What did we do? Sucked a lot of sellers in because of the report, and we did the Acapulco cliff dive in the ETH. Love it. What does this do? Write this down. The market goes up to go down, and the market goes down to go up. If I see a short, it creates a problem for me. Here's a problem for me. I want to get long. If I put a short on, I'm managing my short. My brain is occupied with this. Now, that might be okay for you. I'm going to just talk about me. My brain's a little slower than that because what I have to do is anticipate a trade. If I get my brain hung up in this, I'm thinking about managing this thing. And maybe, if I don't get my target, I'm going to get taken out of it maybe here. Okay, if I was short. Well, now I want to be getting long out here. Well, not here, you see. Am I going to flip here? Very hard for me to flip because my brain is sort of like melded to I'm in a short managing. Instead, if I skip the short because I want to be in alignment with the higher time frame, I'm in a better position psychologically. Even though I took a long here, why not? I mean, is there anything wrong with this? No, until it comes under here. And even then, it's still paid. I got a few stakes out of it. Then this is the real deal. Now it's back here, add, above here, potential long. These are all Trader Lab structured trades. Resistance, scaling, holds here, up. Just watch it. This is just Trader Lab. It's not complicated. It's just random. This, long. That's it. Ask your questions, and I got to show you something. Post your questions. I'll take a look at them. Oh, we're still going. So now you're in a manage. Follow the yellow brick road, manage your trade. And that's something else. That's other processes we discuss in Trader Lab. And I got something else I got to show you that you might find really interesting. And this is also available at no cost. You become a Bookmap subscriber. You can get... you can win 3 months of Global Plus with stocks and futures data. This is the Bookmap Academy. You can, if you're a subscriber to Bookmap, you can enter the Blue Jacket competition. So you get a nice jacket and 3 months of Global Plus with data. It's really cool. Okay. Whoops. Never mind the dates. Now, a little more. What do you get? What is the Academy? You can network. You can get some coaching. How do you join? You join the Junior Academy. You apply. You need to do screenshots, create quality content, and meet a monthly quota. And then you need to attend monthly Bookmap Academy meetings. You get Global Plus free, double your monthly quota, and you also get free add-ons like the MBO bundle. And you can even access pre-release products and add-ons. So you get journaling, your trading content, you get mentored by other traders, you network, and it's pretty cool. And if you're really a hot to trot, you might become a Bookmap Academy coach and maybe even become a Bookmap Academy streamer. All this is available, and there's no additional cost for it. I suggest if you have not used Bookmap, or even if you are a user or you don't know what you can do with it, that you visit Trader Lab, see how these tools are used and how they might give you an edge over other traders. If you combine Bookmap with an understanding of how the market works, why it does what it does, you might find that you actually might be on the path to something different if you're not satisfied with your current outcome. One thing I found for myself as a developing trader, going back, I started in 1980, was that I was, believe me, tenacious, persistent, which is a form of tenacity, absolutely dedicated that I would do it, and determined to the nth degree, didn't matter. I would do whatever it took. What I didn't understand was I did not have a statistical edge. I would get I would win. And what I thought was, well, I'm winning, I just have to make it better. That's kind of logical, isn't it? Hey, I just have to make it better. What I didn't understand was I was focused on avoiding the pain of loss, of course, and making money. You think, oh, really? Aren't we all? No, the success and the profits are the outcome of your process. If you're the gambler, you will have winning trades, but over time, you still may not be profitable, or you won't stay profitable, I should say, because even gamblers have streaks. You see, the illusion is that we just have to make it better and, quote, fix it. I call that trader Groundhog Day, and I did a webinar on it, and I coined the term because of me. Why? I would get excited. I would spend, I can't begin to tell you how much time tuning, tweaking, and looking at rotations and trying to get and using indicators and price-based derivative processes to define these conditions with the assumption that they're going to show up again. And they did. The problem was using that process actually caused me to lose intermittently, but more losses than gains. So what would happen is I'd get the big trade, or I'd get the trade that fit everything. But in between all of that, I would get the gains, and then I'd give them back. And even though I could move the ball forward, I was over time moving, the ball backwards. And why is that? Well, I just got to make it a little better. Maybe I got to tune it, optimize it because the market changes its condition. Okay, I built trading systems which were extremely mathematically complex with conditional statements and branch logic. The perfect solution. And then I optimized them. Chunks of data, walk forward testing. I was managing a large amount of dollars. Now, this is swing trading and position trend following processes over a large sample size of different markets. So I had to systematize it. But it was always breaking down. And I was really frustrated about it. And then I said, well, the answer is simple. You just got to re-optimize it. Well, it didn't change the outcome. It would fit, it would break down. I'd go back. And why would it keep breaking down? Because today or this week or Monday is not Thursday or Wednesday or Tuesday. It is unique. But when you curve fit, you are really removing the uniqueness of the current condition and trying to put it in a box that somehow everything will be the same. If you watch Friday's webinar, I talked about different trade plans for different conditions. We started out the morning with a directional bias based on the trade plan of going up. The condition in the morning was mean reversion. It was a different plan in a plan. So the morning trade was open, down, up, chop. And we had two-sided trade. That's one type of trade plan inside of a higher time frame trade plan. So longs only in a rotational plan to get the sellers in to become the fuel to squeeze so they become buyers along with us, if it's part of your plan, to go to the targets and squeeze out the shorts and new all-time high. Is this logical? And can you see how optimization has nothing to do with the condition or the context? And indicators. Can your indicator tell you how to trade this market and what to anticipate? Not what will happen, because nobody knows that, and neither do your indicators. But do you see what the point I'm trying to make? And I'm not saying you can't use indicators. I'm saying is, if you understand the condition of the market, think what you might do with an indicator that was specifically designed to operate under a certain condition. And then you change what you're doing based on the change in the condition and maybe the indicator and how you deploy it. Have you ever thought of that? Just a question. Carlos, statistics are something that individual traders develop. There are statistics available to everyone, as well as a library of webinars on this process, some up to 4.5 hours long of real-time narration under many different conditions and transitions. One of the things about intraday trading like we do is the market's not static. In other words, it gets directional, then it gets rotational, then it goes back, however it manifests itself. Those are different. The different conditions are different plans inside of plans. All of this is available in the Bookmap Discord Trader Lab. The link in bottom of YouTube can take you over there, and there's no cost. And there's a community. So many of these communities are subscription based and all. Right now, the Trader Lab community, there's no cost. And you can access all the resources, not only of the Trader Lab, but all the education that Bookmap offers. Other streamers, other approaches, stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, option swing trading, large cap, small cap stocks. This process I'm sharing with you is generic. You could trade a jelly bean with this if you want, or SPY, or Qs, or anything, ETH, stocks, swing trading, currencies, bonds, doesn't matter. Like I say, jelly beans. And the reason is, this is the market. This is how the market works. When you understand, and this is not like you come, by the way, if you come to Trader Lab, roll up your sleeves and commit yourself to an experience and to time. If this is language, what I do, if I don't use indicators, what am I doing? I understand the language. This is a language. Most of us, kind of what we do is we get an indicator and we're using it like Google Translate. I mean, it's logical if you think about it. Oh, what's this? Well, my stochastic rolled over here or something. Oh, it's a short. Is it really? Right here, for me, it's a short. Or it's not, by the way, because the context is up. This is a short against this microstructure, this volume. I'm just pulling this out of thin air. High volume, seller. Where's my test? Here. Trapped, downside rotation. Now this is support. You see, opposite, volume, buyer. These sellers are stuck. I just pulling this out of left field. I'm reading this in real time. What's my indicator doing? Sell, buy, is it sell? Well, what's it doing? Chopping me up? Not me. And yeah, I get chopped up too. But I don't need an indicator to do that. That's just part of trading. But the point is, if I don't understand context, am I shorting this? Why? I can't. What is this telling me? North. Where are we, by the way? Still going up? I don't know. Still long. Are you? Did you get long today? Are you still long? Do you have a trade management process to manage this trade? Where was our long from? I know. Seems like a long time ago. Wasn't it here? Or here? Let me see. Call it, let's be generous here. 54.93. That's a 35 point or more trade. One trade, Trader Lab. Are you interested in Trader Lab? Click, first of all, a thumb up in YouTube. Least you can do. Consider it, that you're saying is, yeah, this is worthwhile. Please continue, because that's the only way I know, since there's no subscription, right? So there's no way for me to gauge, or Bookmap to gauge, if you guys even care about this and that you're getting value. That's what's important. Come to Trader Lab, join the community, serious traders. And why do we have a community? Because we want to leverage the collective experience. Our senior trader has over 50 years. I'm going on my 45th year. I'm still learning. I'm still excited to come to the market every day. I'm still trying to get better, and I'm still trying not to make errors, because occasionally I make them. And that's Hyde. I have to fight Hyde, Jekyll and Hyde. Hyde interferes. And if you're not absolutely focused, that voice in your head, it only takes a moment's lapse in focus and concentration, and somebody else, Hyde, is moving your mouse to move the stop to break even when it isn't even part of your plan. Or your fear, which is Hyde, says, I took a stop on the last trade. I'm going to skip the next one. I'm not sure. Guess what? We're not sure on any trade. Why would you skip the next one? Hyde is in control and whispering in your ear. You need to learn to recognize Hyde. You get that by journaling. When you have emotions, you got to write them down. When you take a loss and you have feelings, you got to write it down. And then you want to see if you skip the next trade, you're going to be able to reflect on why you made a decision that has nothing to do with the next unique event. Casinos, when they pay the gamblers and somebody sitting at the blackjack table walks out with a nice new suitcase with $100,000 in cash, do you think the dealer gets depressed and despondent and doesn't deal the next hand? The only way the casino extracts the dollars over a large random sample of interaction with the gamblers is to deal the cards, not to change the game, to keep playing the game. And they only play games that have a vetted statistical edge. When you come to Trader Lab, if you don't have an edge, you need to get one. If you are playing without an edge, then you're just having fun, and that's okay. You're entertaining yourself. It's a video game. You're a gambler. It's like, what are they? The betting, the betting apps they have? That's all. Well, that's okay. I suggest if you're going to gamble, you go to casino and get the cocktails and the ticket to the buffet. If you want to be in the business of trading, that's what Trader Lab is about. And I invite you all to visit Trader Lab. It's no cost, and I kind of think, I wish when I started there was something like this. There wasn't. There was no Trader Lab, no internet, no computers. How do you like that? Abacus, hammer, and a chisel, and a rock. Pre-computer, pre-internet. And so it was very hard to get information. You guys have the opposite problem. Anybody can quote, be can open a chat room and throw something out there and do, follow this, do that. That's not trading. You can't sustain a career or even have a career in trading. You might as well just send that person your dollars, and then you go to work and let them make dollars for you. So this is why this is not a trade calling room, because the thing you got to sort out is your time frame, your groove, if you will, your dancing partner. What is your rhythm and your risk tolerance and your ability to read the market? I personally prefer higher time frames. I trade inside them, but I also have an understanding of what might happen. What might happen? This all-time high, see you later, and look at what came in here. Might you want to be done with the trade? Yes, maybe, not a trade. Why? Let's look. I'm going to show you this. Just a little something. First of all, we got through here. You see the absorption here. Buyers consume. Think of it like a little Pac-Man. You remember Pac-Man. Buyers here. This was where the sellers were active. We're above it. Sellers try here. Stuffed. Liquidity comes in the book. Pressure. Buyers. What do I get here? Buyer absorption. Seller. Liquidity comes in the book. Absorption. Sellers. I'm seeing my sellers right here. So I know this could be problematic. I rotate down. Now you have choices. Trailing stop here. Trailing stop under here. Up to you again. This could be the high right here. No clue. Pull back. Looks like the end of the planet. Now there's no way to know. So you could be out of this trade if it takes this swing out. Seller here, looks like it's going to zero. Buyer got absorbed here. This is order flow. So I'm looking at this and looking at this. But not the problem. Liquidity is here. Take it out. What happens here? Seller stuck, seller stuck, seller stuck, and seller here now stuck. Liquidity up, seller above it, seller above it, seller. Liquidity stacks. What do I see here? Seller, seller. This rotation is deeper than what? Than this. Than this. change. Don't know until hindsight. It's always brilliant when you look back. What do I see here? This buyer got absorbed. Stop sweep, buy stops, selling iceberg, no clue. I am clueless. Watch. This we have to get over. Bigger rotation down, buyers here, rotation up. You could be taken out here, and if you weren't out, you'd be out here. And then it can keep going. It doesn't matter, does it? Me, not that much of a problem at all. So now, done. Now there's more. Do you have questions? I'm going to show you more microstructure trading now. This is more advanced. Nobody should be thinking about it. Please give a thumb up in YouTube. Yeah, Debbie, we're all the same. Guys, nobody knows the high, the low, nothing. Jose, this is kind of a tick chart, so it's not time-based. I mean, I just scrunch it up and down. I mean, the more I zoom in, like this right here is 1 minute, but it's not time-based. I don't use time. I use structure. So time is not part of my thing. I can look inside of behavior and understand what this is right here. I'm going to explain it to you. You guys have more questions, post them, please. And please give a thumb up in YouTube, guys. I always appreciate you stopping by to Trader Lab. Remember, Trader Lab is a community of like-minded traders. You know, it doesn't matter what you do. What process, doesn't matter. What matters is that if you're interested in leveraging your experience with other traders, many of whom, same as you, some are newer, some have been around a long time, many diverse experiences, but we have a lot of things in common. You know what it is? We're human. We're subject to the same emotional pitfalls and challenges, and also going down the road that most retail traders go down, which is indicator driven and predictive. We don't understand the business. We truly don't. We think that it's about predicting, right, where the market would go. It's kind of how I started out. I started out with classical bar charting at the CME. There were no computers. There were no technical indicators per se. They were just coming out, Wells Wilder. And we didn't have the technology early on. It was very hard. You had to use a dumb terminal. And I stress the word dumb. And that's where I first got exposed, to ADX, DMI, all this kind of stuff. On balance volume, we didn't have real volume. Didn't exist. You couldn't get it. And I shared that office with George Lane, which really opened me up to oscillators. He created stochastics. So here I am in an office with a guy who created stochastics, and I'm looking at this one thing crossing over, and I'm going, oh, this is great. Look at that. It crosses over and the market goes up. So I started experimenting. And anyway, I'm going to mention years of oscillators and then hybrids of different things. So your trend, advanced volume, advanced declining issues, ratios, and all this kind of stuff. Elliott wave, Fibonacci, Fibonacci. I can't even remember because I don't need to. All I know is been there, done that. And all of them have some value. But what happened was I started putting more pieces together because I thought, well, if each of them on their own at some time, because that's part of the randomness, provide some value, if I put them all together and optimize them, I'll have more. It didn't work that way. But logically, it would seem that it would. And what drove me to do this? You're going to think it was profits. Well, that's the outcome. What drove me to do it was looking to avoid the losses. Is looking to avoid the losses? Now, I'm asking you a deep question here. Looking to avoid losses. Let's connect that to what it really means. Needing to be right. Needing to avoid pain. We're wired to run from pain. So that creates, I'm not going to take the next trade, or I need certainty, which is also why we use all these indicators and we pile them up to avoid the pain, the need to be right. This is purely psychological and emotional. The casinos are not playing or managing their business to avoid pain or losses. They figured out they're actually in a business, and businesses have overhead and cost of production, right? We're in a business. We are not in the pain avoidance business. We're not trying to feed our emotional state business. We're in the, I know I got to pay the gamblers in order to get the yield. I know I've got to take the trades that have a statistical edge. I don't play games randomly that have no edge, even though occasionally they work, right? I don't take trades that aren't in alignment with the context, even though if I did, sometimes they work. That is the fallacy. The business of trading is the discipline to wait for your trade, to know it has a statistical edge. That's the work. None of us want to work. We all want to play. I get it. I think a video game is the place to play. This is business. Building a career in trading is basically starting a business and understanding how that business works. Understand that trading is unlike any other business you'll ever be in, but it does operate, has certain truths to it that all businesses do. That is overhead and cost of production. The other part of running a business, if you want to think about it, if you were producing a widget, there would be a net, right, profit or percentage that trickles to the bottom line. Why? Because even though expenses are not necessarily completely fixed in business, we have kind of a general idea what our overhead is. Then we have the things that go bump in the night in business but we have to allow for it. We allow for randomness in all businesses, seasonality, potential competitors, changing costs, all that, right? Isn't that business? Well, how does the gaming work or casinos operate? Well, they only take trades or produce products or setups that have a statistical edge. They don't play games. They don't change them. They don't make them up unless they have an edge. They pay the gamblers because that gets the gamblers to come back to the table, and they net, because of the edge, the dollars that make up for the expenses and overhead, including the cocktails and the buffet and the rest of it, and they build bigger casinos. That's our business model. That's what the Trader Lab is all about, and structured trades. 60 PDFs of structured trades that you can download and reverse engineer. This is what they look like. It's not fancy. By the way, I'm not a vendor, and this information, when I put it together, it was just because other traders were asking me, what are you doing? I go, here's what I'm doing, and this is before there was streaming in the sense of this kind of a chat situation. Bookmap has always been a leader in education, order flow education and having guest streamers. So they, hey, would you stream? Would you be a guest? Okay. And then it became, how about doing a little more? Okay. This is not my business. My business is the same as yours. But I do this because of what I went through developing. It was and most of us don't have unlimited time and resources. So there's explanations. These are the same trades. Some of these are live trades. Some of them are just screenshots. It's just, and plus there's now the Trader Lab. Here's order flow. This is an actual trade. I'm sitting short. And this covers, maybe I can just show you. I want to show you this. If I can, come over here. Losing my mind. Where'd it go? Here it is. I'm sitting short. This is how order flow and Bookmap helped me. This is a bracketing algo. And I'm going, what's going on here? Short. What happens here? The algo pulls and pushes. Right there, I hit the plunger. Eject, the canopy flies off, I'm out of the short. What does it do? Explodes to the upside. Regular retail traders, if they were sitting short, would have no clue. They would just get run over. Right here, out. How fast did I respond? Look at that. I'm just making a point about order flow. This is what the Trader Lab is about. It's about helping traders understand how the market works, what it does, why, and develop trade plans that you can vet and reverse engineer and make your own and be in a supportive community. Thumb up in YouTube. Click the link in the bottom of YouTube if you're interested. By the way, right here. So this trade, remember, I'd be done here. Break, this is support. Let's watch the behavior. Now, what can happen? Micro high volume structure. Micro high volume is here. Retail in the fractal. Too high. If I fall out, where might I go? High volume is here. Microstructure right there. And if I fall under this, then this. The trade in the long side is over for me. It is not a short. I'm not saying it can't be a short for somebody else. Me, not so much. Notice what happened here. This buyer was absorbed. What happened here? These buyers were absorbed. When I broke above this liquidity, it has now become support, not a recommendation. All we want to do is observe. When I break under here, if I do, it's follow the yellow brick road. I go back to the next high volume area. If this outside edge, microstructure, is too low, I can then, right here, come back here. And if I get through this, come up here. If not, it's been nice. We'll send you a nice coupon to the buffet. Questions? Trader Lab trading, guys. I believe anyone can learn to trade. I believe I can teach anybody to trade. Now, I'm not saying that and being insensitive. What I can't do is do the work. I can share structured trades, and you have to vet each one individually. It's a function of fractals and time frames. Certain trades we will see, but you cannot take them because there's no range. I know right here, this is not a trade I can take, but I can narrate it and look for potential behavior. I'm seeing sellers here, sellers here. If I don't get buyers above right here, then we're going to continue down. Right now, this is support. And all it might mean is a little rotation. It doesn't mean anything more than that. But I can look at this and I can anticipate it. Then it's, do you feel lucky, as Dirty Harry used to say? Please give a thumb up in YouTube. This is no indicators. This is understanding how the market works, where it might react, and then I understand what's too high here. Right here, I can go here to this volume. This is trading in fractals. Now, right here, what is this the same thing as? This will blow your mind, maybe. And this is Trader Lab. Can't even get there. It's so far away. Eek. That long, which is where our long was, and you see where the market is now, I think that makes for a good day. If you want action, you can have as much as you want. Me, I have a different objective. Mine is to take what I think of as intelligent risk. This micro high volume here is the same as that naked VPOC, is the same as this microstructure here. This is the beauty of the auction. It happens in all time frames and fractals. I consider this a fractal or a time frame, but no clock. Please give a thumb up in YouTube. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, review, compared to what you did today. And we always have to get better. You're never done if you're in the career. If you want a career in trading, visit the Trader Lab. I cannot guarantee what your result or outcome will be. Trading is not for everybody. Absolutely not. However, if you're waking up with Trader Groundhog Day, maybe it isn't your intention or your effort. It's your process. And the problem with Trader Groundhog Day is we have intermittent success, even if the process doesn't have an edge. Determine if your process has an edge. If it doesn't, click the link in the bottom of YouTube. visit the Bookmap Discord Trader Lab chat. Thumb up, please. Look where the support is. Here and here. See the liquidity come in? This is using order flow and putting it together with the auction. This is your volume. This is resistance. This is resistance. We'll see what it does. Thumb up, please. Visit the Trader Lab. Thanks, everybody. I appreciate you taking the time to visit with me today. I would appreciate a thumb up on the way out. Click the link in the bottom of YouTube if you'd like to access the Trader Lab. Download the 60 PDFs of the structured trades I just showed you. Access all the additional education in the Bookmap Discord server, stocks, options, crypto, options, algorithmic behavior, order flow with a high tier tool like Bookmap. I've been using it since 2015. I wouldn't even think of trading without it, and a lot more. I look forward to seeing you guys tomorrow. Trade safe. Remember, we're trading this September contract and the U.S. markets are closed on Wednesday. There will be no stream on Wednesday. Also, I did make Friday stream public. I wasn't planning on doing that, but it goes over really the business side and different contexts and conditions and trading inside fractals. It's similar to this, but it was a much more challenging day, Friday. But if you look at Friday's webinar, it's about the business of trading versus playing a video game. If you want to be in the business, I think Trader Lab might be a nice stop for you on your journey. Thanks again, guys. Look forward to seeing you soon. And as always, thanks for visiting the Trader Lab.